Disclaimer: Reggie and Royal's analysis and insights are based upon data gathered by it from various sources believed to be reliable, complete and accurate. However, no guarantee is made by Reggie and Royal, or Vision Associates LLC as to the reliability, completeness and accuracy of the information so analyzed. Reggie and Royal is in the business of gathering information, analyzing it and disseminating the analysis for informational and educational purposes only. Reggie and Royal attempts to analyze trends, not make recommendations. All statements and expressions are the opinion of Reggie and Royal and are not meant to be investment advice or solicitation or recommendation to establish market positions. Our opinions are subject to change without notice. Reggie and Royal strongly advises readers to conduct thorough research relevant to decisions and verify facts from various independent sources. Copyright 2021 Vision Associates LLC. All rights reserved.
Remember all those jokes about Bitcoin? You know, like it being just a fad, something for tech bros and meme-loving investors.
Right.
Well, it seems like the punchline is on us.
Right.
Because now the financial giants are piling into crypto.
It's a pretty remarkable shift. What was once dismissed as, risky and volatile.
Yeah.
It's now being embraced by these institutions across the whole financial landscape.
Exactly. And you gave me some pretty fascinating sources for this deep dive. Podcast excerpts, articles, reports. They all highlight this huge turnaround. So what we're going to try to do today is unpack this whole institutional crypto reversal. Like, why are the very institutions that at one point condemned crypto now like singing its praises?
Yeah, and what does this mean for the future of finance and maybe even your own investment decisions?
Okay, so let's dive in. What really struck me when I was going through all this material was this never say never phenomenon. We have institutions that once like publicly denounced crypto, and now they're like leading the charge.
It's definitely a trend. You can see it with Larry Fink, for example.
Yeah.
CEO of BlackRock, the world's largest asset manager. I mean, they're handling trillions of dollars.
Wow.
In 2017, he called Bitcoin a money laundering index, right?
Right.
But then, by 2021, BlackRock funds were buying Bitcoin futures.
So that's a complete, 180, and they manage 20 trillion in assets. So does this mean that, my 401k one day, a portion of it might be allocated to Bitcoin?
It's definitely a possibility to think about.
Wow.
And BlackRock's not alone, right? You have Citibank. Back in 2014, they were claiming over 10% of all Bitcoins had been stolen or seized.
Really?
But now they're talking about Bitcoin's attractiveness to institutional investors, especially its potential as an inflation hedge.
So it's like they dismissed it for so long and now they're playing catch up.
Yeah, I mean, institutions, just like individual investors, they can fall prey to that fear of missing out, right?
Yeah.
Nobody wants to be left behind, especially when you see your competitors diving in.
Oh, for sure. And speaking of competitors, there's Deutsche Bank. In 2020, they said Bitcoin was too volatile. Its value based entirely on wishful thinking. But just a year later, they were singing a different tune.
Yeah, they completely changed their stance, saying Bitcoin was too important to ignore. And they even started developing a crypto custody platform specifically for their institutional clients.
Wow. So this whole quick change is pretty common across the board then.
Yeah, it seems to be. Another example, Goldman Sachs.
Right.
They initially dismissed Bitcoin completely, claimed it wasn't an asset class, not a suitable investment.
Right.
But then in 2021, right in the middle of the Bitcoin boom, they restart their cryptocurrency desk.
Yeah.
And they even suggested that Ethereum might surpass Bitcoin in the long run.
I remember that. That was a big turnaround for them.
Yeah.
And how can we forget JP Morgan?
Oh, yeah.
Their CEO, Jamie Dimon. He famously called Bitcoin a fraud, right?
Oh, yeah. He even threatened to fire any JP Morgan trader who touched Bitcoin.
Oh, wow.
But even JP Morgan, they couldn't resist the allure of crypto forever.
Yeah.
By 2021, they were actually advising investors to put 1% of their portfolios into Bitcoin. And then this year, they predicted that 2022 would be the year of blockchain bridge development.
It's a total 180, like we were saying.
Yeah, even the most vocal critics, they can change their minds when the market is talking this loud, right?
Hard to ignore. So what do you think actually drove this huge shift?
Well, Bitcoin's returns, compared to traditional assets, it's hard to ignore those.
It's been a wild ride, but overall it's been up, right?
Yeah, that performance has definitely been a big factor. attracting investors who are looking for these alternative assets that could outperform traditional markets.
Yeah, and it's not just individual investors. We're talking about hedge funds, family offices, asset managers.
Yeah,
They're all looking to diversify, hedge against inflation.
for sure. The sources you gave me, they mentioned something like $17 billion of institutional capital flowing into crypto in just 1 year.
Wow, that's huge.
That shows you their appetite is growing.
So is there anything else you think is a factor in this shift?
Well, you have the regulatory landscape.
Yeah.
That's changing too, right?
Mhm.
Things like the Office of the Controller of the Currency, their interpretive letters, they've given these institutions more confidence to actually engage with crypto.
Yeah, I can see that. Like, having that regulatory clarity is super important, especially for institutional investors.
Yeah, they need to operate within a framework that mitigates their risk and ensures compliance. And as the regulations around crypto have evolved, it's become easier for them to enter the space.
Makes sense. But BlackRock's move, it's kind of interesting, right?
Yeah.
Because they're so big and they've been vocal about sustainability. And like, Bitcoin mining, it uses a lot of energy.
Right.
How do you think they reconcile those two positions?
That's a good question. It shows how complex this whole institutional adoption wave is. They've emphasized sustainable investing, but they're also responding to this growing demand for crypto assets. Maybe they believe the industry is moving toward more sustainable practices, or they're looking at specific cryptocurrencies with a lower environmental impact. It's something that would be interesting to dig into further.
Yeah, definitely. So we've talked about the general trend, but what about some specific examples?
Sure.
One that stood out to me was Morgan Stanley. They were the first major U.S. bank to offer Bitcoin funds to their wealthy clients.
Yeah, that was a landmark moment. And the details are pretty interesting. To even be eligible, clients needed at least $2 million in assets, accounts that have been open for at least 6 months.
Wow.
And they could only invest a max of 2.5% of their net worth in Bitcoin.
So that suggests they're taking a careful, calculated approach.
They're acknowledging the volatility of crypto, but still wanting to give their clients access to this new asset class.
Right. Do you think that cautious approach is going to be the norm? Or will other institutions be more aggressive?
It's tough to say. It depends. Each institution's going to have their own risk appetite and strategy, right?
Right.
Some might follow Morgan Stanley's lead and take that measured approach, while others might dive right in, especially if they see the potential for big gains.
It'll be interesting to see how it all plays out. And speaking of different strategies, JP Morgan's journey, I mean, they went from calling Bitcoin a fraud to saying 2022 is going to be the year of blockchain bridge development.
It's amazing, isn't it?
Like, they've accepted that crypto isn't going away, and now they're involved in building this infrastructure for a more, like, interconnected crypto ecosystem.
It seems that way.
Another one that's really interesting is PayPal.
Yeah.
They first dismissed Bitcoin as worthless,
Right.
but then partnered with Paxos to let millions of users buy, hold, and sell crypto.
It's a big turnaround.
Yeah.
What I find interesting is their focus on user education and building a compliant infrastructure.
Yeah.
Like, they've taken a very deliberate approach to integrating crypto into their existing services.
Right. So you have PayPal focusing on that consumer adoption. But what about, like, the potential for crypto in institutions, like for things like cross-border payments or supply chain management?
That's a great point. I mean, consumer adoption, that's definitely a key driver of growth. But those institutional use cases, they're huge too. They could have a huge impact on global commerce and finance.
Yeah.
We'll probably see developments in both areas, with institutions and consumers finding new ways to use crypto.
It seems like everybody is trying to figure out where they fit in this new world.
Exactly. It's creating a super dynamic, competitive environment. And, to add a little pop culture element to our deep dive, we should look at Kevin O'Leary, Mr. Wonderful from Shark Tank.
Oh, yeah. He's a perfect example of a very public crypto reversal.
Oh, he is.
He initially called Bitcoin garbage.
Yeah, but now he's become a huge advocate, putting a big chunk of his portfolio into crypto.
And he's into that clean coin mining, right?
Yeah, that focus on renewable energy sources. It definitely resonates with investors who are interested in sustainability.
Yeah.
I think it reflects a trend in the crypto industry itself, addressing those concerns about the environmental impact. It's also a smart way to tap into that demand for ethical and sustainable investments.
So we've seen this huge wave of institutional adoption. Do you think this means that crypto could, like, eventually challenge fiat currencies and traditional financial institutions?
It's definitely possible. Cryptocurrencies, they offer this decentralized, transparent, potentially more efficient alternative to those traditional financial systems. As it gains wider adoption, it could really change how we think about and interact with money.
That's a pretty fascinating prospect. But it's probably going to be gradual, right? It's not like traditional finance is just going to disappear overnight.
Yeah, it'll probably be a process of evolution and integration.
Yep.
We might end up with a hybrid system where traditional and decentralized finance coexist and complement each other.
So not necessarily a winner-take-all situation. This is really shaping up to be an interesting story.
Oh, for sure. And we've only just scratched the surface. There are tons more fascinating details and potential implications to uncover. We should definitely dive deeper into this institutional adoption wave in part 2.
I'm already hooked. I can't wait.
Welcome back to our deep dive into the world of institutional crypto adoption.
Yeah, when we left off, we were talking about that huge shift in sentiment from these big players.
Right, from, being skeptical and dismissing it to totally embracing crypto.
And we were just starting to think about what the shift really means, right?
Exactly. It's not just about individual investors anymore.
Right.
It's about the big players,
Mm-hmm.
the institutions,
Yeah.
the ones that actually shape the entire financial world.
And it's not happening in a vacuum either, right?
Oh, no, definitely not. It's all happening in this, rapidly changing regulatory landscape.
Yeah, there are both challenges and opportunities there.
Sure.
The SEC, for example, they're really taking a close look at crypto these days.
Right.
What do you think that increased scrutiny is going to do? Will it help or hinder institutional involvement?
That's a tough one. I mean, on the one hand, greater regulatory oversight, it could give institutional investors more clarity, more stability,
Okay.
a well-defined regulatory framework. That could reduce uncertainty and risk,
Right.
making them more comfortable with participating in the crypto market.
Yeah, that makes sense. Institutions, they're used to operating within a regulated environment.
Exactly. But too much regulation, that could stifle innovation,
Right.
slow down the growth of the whole crypto ecosystem.
So it's like this balancing act.
Yeah, exactly. Regulators need to protect investors
Mhm.
and keep the markets fair,
Mm-hmm.
but also not stifle the creativity and that dynamism that we've seen in the crypto space.
I think that's one of the things that makes it so interesting.
Right.
It'll be interesting to see how that all plays out, but I think the maturation of the crypto ecosystem itself, that's going to be key to attracting more institutions.
Absolutely. I
Yeah.
totally agree. We're seeing constant development, in the infrastructure,
Yeah.
custodial solutions, investment products, all those advancements. They're essential
Yeah.
to make a more robust, accessible market
Yeah.
for institutional investors.
Yeah. For example, the whole custody issue, that's a big one.
Oh, huge.
Institutions, they need safe, reliable ways to store their crypto.
Yeah, they need to know it's secure. That's why companies like Fidelity and ING,
Right.
they're developing these specialized custody solutions.
So they're tailored for institutional needs.
Yeah, exactly. And they're getting more sophisticated, more widespread, really lowering those barriers to entry for institutions.
Yeah. So as all those pieces fall into place, it really seems like everything is set for even more institutional involvement. Can we shift gears for a sec and talk about some specific institutions?
Sure.
I was really interested in Schwab. They totally dismissed crypto back in 2019, said it was purely speculative, but now they've definitely changed their tune.
Oh, yeah. They're offering their investors a bunch of ways to get into the crypto markets now.
Really?
They don't offer direct spot trading of crypto yet, but they do offer these cryptocurrency coin trusts.
Okay.
They're traded over the counter and basically work like closed-end funds.
So it's like they're dipping their toes in the water, not
Yeah.
fully diving in.
Exactly. And they're not the only ones being cautious. Vanguard, too.
Really?
They haven't launched a dedicated crypto fund, but they offer investors access to ETFs and mutual funds that include companies in the crypto space.
So people can indirectly gain exposure.
Exactly, through more traditional investment vehicles.
Okay.
It's a way to diversify their portfolios and benefit from crypto's growth without actually investing in cryptocurrencies themselves.
That might appeal to some investors who are curious about crypto, but still a little nervous about how volatile it is.
Right. You get some of the potential upside, but you're mitigating some of the risk.
It's an interesting dynamic. You have institutions jumping in headfirst
Yeah.
and others taking a much slower approach.
Yeah, and that just reflects how the crypto space itself is always changing. There's not one right way to do it.
And speaking of evolving, there's Visa.
Oh, yeah.
A few years ago, they were super against Bitcoin, saying they wouldn't process transactions with it.
Right. They said it wasn't a real payment system.
But their position has changed, hasn't it?
Oh, for sure. Now they see crypto's potential. And they're working to enable purchases with Bitcoin and other cryptocurrencies.
They've even partnered with like over 50 crypto service providers to allow users to convert their crypto into regular money.
Right.
And use their Visa cards in tons of places.
It's a smart move.
Huh?
Visa is positioning itself as a bridge between the traditional financial system and the crypto world.
So they're adapting, recognizing that crypto is here to stay.
Exactly. They're future-proofing their business.
Yeah. But their initial resistance, it makes me wonder, could there be other big financial players out there who are still skeptical but might end up having to adapt as crypto gets more popular?
Oh, definitely possible. The institutions we've talked about, they're just a tiny part of the whole financial world.
Right.
There's so many other banks, investment firms, financial service providers who are still just watching,
Yeah.
assessing the situation.
But the question is, how long can they afford to wait?
Right. At what point does missing out become more scary than the unknown?
That's the big question.
And each institution will have to figure that out for themselves
Yeah.
based on their own risk tolerance, their goals, how they see the market.
It's like a big game of chess, isn't it?
Yeah.
Everyone trying to guess what everyone else is going to do.
Trying to be successful in this new financial world.
And speaking of surprises, I think earlier you mentioned another big institution that totally changed their mind about crypto.
Oh, yeah. I was saving this one. It's a really striking example. Bank of America.
Bank of America. I don't remember them being very pro-crypto.
Well, back in 2018, they completely banned crypto purchases with credit cards.
Yeah.
They even sent out a memo to their employees announcing it.
Talk about taking a stand. But I guess that didn't last.
Nope. Just 2 years later, in 2020, complete shift.
Really?
They started treating Bitcoin and other cryptocurrencies like cash equivalent.
Wow.
And they decided to treat crypto transactions like cash advances.
That is a huge change. What do you think caused that?
They actually put out a press release with a report called Digital Assets Guide, just the first inning.
Okay.
Their main point, Bitcoin and the whole crypto market were just too big to ignore.
So they finally saw it wasn't going away.
Exactly. And they seem particularly interested in NFTs.
NFTs.
Yeah. The report suggests NFTs could be much bigger than just the current boom.
Wow.
Spilling over into other industries.
That's pretty forward thinking for a traditional institution.
Yeah, it shows they're not just reacting to trends. They're trying to really understand this tech in the long term. They see the future of finance is going to be different.
Right.
And they want to be a part of it.
So they went from banning credit card purchases to publishing reports.
Yeah.
And talking about crypto's potential across industries.
It really shows how even the biggest skeptics are starting to see crypto as legit.
Yeah. Makes you wonder who else is about to make a similar move.
It does. It really shows how unpredictable and dynamic this space is.
Right.
As we continue looking at this institutional adoption, we'll look at some more examples.
Yeah.
And try to answer the big question.
What does this mean for the future of finance?
Exactly.
Can't wait. Welcome back to our deep dive. It's the final part of our look at institutional crypto adoption. It's been quite the journey.
It has been.
We've seen how sentiment has changed.
Yeah.
From skepticism to like full-on embracing crypto. We talked about what's driving that change. And we've seen some institutions totally reverse their stance on crypto.
Yeah, some really big changes.
So as we wrap up, let's look at some of the remaining examples from our sources.
Okay.
And try to answer the question, what does this all mean for the future of finance? Like, where do we go from here?
Good questions.
One institution I'm curious about is ING. They seem to have a more like nuanced approach to crypto than some of the others we talked about.
Yeah, ING's journey has been interesting. At first, they were worried about Bitcoin's volatility and whether it would just stay a niche thing. But then by 2020, they were working on a crypto custody offering.
Really?
They saw the demand from institutional clients was growing.
Makes sense. They even worked with other banks on that project called Pike, right?
Right, that custody and post-trade infrastructure for crypto assets.
It seemed like they were really like weighing the risks and the opportunities.
Yeah, definitely. Trying to find a good balance.
And they focused on making it compliant and secure for institutions to get into the crypto market.
Exactly. Acknowledging both the potential and the risks.
Yeah. Their research also brought up a good point.
What's that?
Whether consumers will adopt crypto depends on how useful it is in everyday life.
Right. It can't just be for speculation or a cool tech thing.
Yeah.
It needs to have real benefits.
Yeah.
Solve real problems.
And that brings us back to PayPal. They went from saying Bitcoin was worthless to embracing it fully.
Oh, yeah.
Even letting people pay with crypto at tons of places.
It just goes to show how powerful user demand is.
Yeah.
And that even established institutions need to adapt.
They saw the interest in crypto was growing.
Mm-hmm.
And they knew they needed to offer a way for people to get involved.
Right.
And they didn't just jump in. They built a compliant infrastructure, partnered with a good regulatory tech provider, and they made sure to educate their users about crypto.
They did their homework. They're committed to doing it right.
And their venture capital arm, they're investing in blockchain and crypto startups too, right?
That's right. They're not just offering services.
Yeah.
They're actively supporting the whole ecosystem.
That's smart. Not just reacting, but trying to shape the future.
Yeah.
And speaking of shaping the future, there's Kevin O'Leary.
Oh, Mr. Wonderful.
He's not a traditional institution, but his story is interesting.
For sure. He shows how opinions can change when people learn more about crypto.
Right. He called Bitcoin garbage at first.
I remember that.
But now he's a big advocate.
Putting his money where his mouth is.
And that clean coin mining thing.
Yeah, with the renewable energy.
And he shows the crypto industry is changing too.
Yeah, addressing those environmental concerns.
So we've seen examples from BlackRock to Morgan Stanley, ING, PayPal.
All range.
We've seen how they've not only gotten into crypto, but they've helped it develop and become part of finance in general.
It's amazing how much this technology has transformed things.
Yeah. But this shift brings up some questions too, right? Like, what about decentralization?
That's a good point.
One of the big ideas behind crypto is that it's decentralized.
Right. Outside of banks and governments.
But as more institutions get involved,
Yeah.
could that be a problem?
That's a valid concern. Some people worry that it could lead to more centralization, more control.
Yeah.
And that kind of goes against what makes crypto attractive in the first place. It's a tough balance.
Yeah.
I mean, institutions bring expertise, capital, infrastructure.
Right.
That all helps crypto grow.
But we don't want that growth to come at the cost of the core values of crypto.
Exactly.
How do we make sure crypto stays true to its roots while still benefiting from what institutions bring?
It's something the whole crypto community will have to figure out.
And every investor needs to think about it too.
Yeah, as they decide how they want to be part of this.
Lots to think about. And then there's the whole thing with CBDCs.
Central bank digital currencies.
Yeah, some countries are thinking about making their own.
Right, backed by their central banks.
How do you see those fitting in?
That's another interesting thing to watch. CBDCs could offer some of the same benefits as crypto.
Like faster transactions.
Yeah, and lower costs.
Right.
But central banks would still control the money supply, keep inflation in check.
So it's like a hybrid approach.
Yeah, combining the old and the new.
So maybe it won't be one or the other.
Right.
We might end up with a system where traditional institutions, decentralized networks, and even government digital currencies all work together.
It's a very exciting time to be watching this all unfold.
So many possibilities, uncertainties, potential disruptions.
And it's happening right now.
We've given our listeners a lot to think about.
We have.
Thanks for helping me explore this institutional crypto wave.
My pleasure.
Yeah.
And to our listener,
Yeah.
as you figure out this new financial world, stay informed, be critical, and most importantly, be open to what's possible. The future of finance is in your hands.